Hi there, Rati here with Mami Beluga Investing. Today I'm going to discuss the fourth company that constitutes Singapore's Straits Times Index. Finally, it's not another bank, it is Singtel. My quick take for Singtel is, first, it's an old company that's in the mid of transformation to stay relevant for the challenging future. I don't have any plan to make a position yet, but I'll keep watch on Singtel's transformation progress. What are the basis of my conclusion? I'll explain in the rest of this video, so keep watching. Okay, a little disclaimer. This is an amateur video. My main intention is to record my journey of learning and practicing investing from scratch. This video shall not replace any financial advice and neither suggestion to take up position, buy and sell in the stock market. Please conduct your own research before making any decision. Finally, feel free to put your comments, criticism, and suggestions in the comment section. But please be nice to me as this is my first series analyzing Singapore stock. Okay, now let's start with Singtel's profile. Singtel was formed from splitting what was then Telecommunication Authority of Singapore, or TAS, in 1992. In 1993, Singtel became public and began trading in Singapore Stock Exchange on the 1st of November 1993. Over the years, it seems to me Singtel had grown through acquisition. It took a stake of a telecommunication company in the Philippines, which is Globe, in 1993. Then in 1997, it acquired National Computer System, NCS, in Singapore. In 1999, it acquired the shares of Thailand's largest cellular operator, Advanced Info Service. Then in 2000, it acquired shares in Airtel, a telecommunication company which has presence in India, Sri Lanka, and Africa. In the next year, 2001, it acquired Optus in Australia. Singtel Optus Private Limited is a wholly owned subsidiary of Singtel. Then in the same year, Singtel also acquired the shares of Telkomsel in Indonesia. Still more. In 2012, it acquired Amubi, which operates around data for publishers and advertisers. And then in 2015, it acquired TrustWave, which is a US cybersecurity firm. Apart from gobbling up other companies, there are some that were homegrown too. In 2010, it founded Innovate, which is Singtel's corporate venture company. Then in 2018, Singtel launched Future Now Innovation Center to cater for enterprise transform. As of 31st of March 2020, Temasek Holdings holds the majority of stake in Singtel with 53% of its shares. 12% of the stock were held within Singapore, while the rest are held outside of Singapore. Okay, that was a rather brief profile for Singapore, especially on its subsidiaries. Now let's go through the numbers. How Singtel performed over the years, particularly in the face of crisis. So here I have Singtel's annualized earning per share for the last 13 years. The EPS is plotted with red round symbols connected by thick red line. I have also included green horizontal dash line to indicate the zero income. Quickly, it is apparent that Singtel did not suffer any losses for the last 13 years for a full year performance. The earnings per share are pretty stable between 2007 to 2016. It spiked in 2017. Majority caused by one-off event, which is sold of 75% stake in Netlink Trust. If we discount 2017 Netlink Trust sale, Singtel profitability has gone down since 2016. In this case, Singtel definitely is not a case of a growth company. Okay, now let's take a look at how Singtel performed during crisis. And here I have Singtel's quarterly earning per share. The picture is looking rather grim for me. Profit has been steadily decreasing since 2016. Singtel recorded 68 million loss. This is reported due to Airtel's court ruling on adjusted gross revenue, in short AGR. So what I can understand from the news is that AGR is the fee that telecommunication company have to pay to Indian Department of Telecommunication, which is DOT or DOT in short. Now company and DOT seems to have different definition on how to calculate this fee, which lead to 15 years legal battle between DOT and mobile operators. The battle ended with a court rule that government definition of AGR is the correct one. Beyond that, the numbers does not seem to show any improvement as profit is still dropping. So given Singtel's dire situation, I wonder what part of the profit is distributed as dividend. So here I plot Singtel's dividend for the last 10 years. Compare again its earning per share. The dividend is plotted as a red round symbol connected with a thick red line. Each dot on the plot have been annotated with two numbers. The one on top is the payout in Singapore dollars, and the number below is the payout ratio or the percentage of dividend to its earning per share. For comparison, the company's earning per share is also plotted as a thin red line. Well, the good news is Singtel's dividend is proportional to the earnings, except for 2017 where it's higher than its earnings. It could be due to the contribution for that one-off item, which is the sale of 75% stake in Netlink Trust. However, the worrying thing is that the payout ratio is rather high in my opinion. Historically, the payout ratio ranged between 67% to 73%, so that is making me rather worry. Now that I've raised up my concern, let's take a look whether Singtel is still fairly priced. So to evaluate if Singtel is fairly priced, here I plot 3 layers of information in a single frame. They are the price, the 10 times earning multiply in green, and 15 times earning multiply in yellow. You could consider an earning multiply 10 and 15 as the price where the price to earning ratio, in short PE ratio, is 10 and 15 consecutively. Okay, now let's look at each of these layers closely. First, let's see Singtel's share price for the last 13 years. At a glance, it doesn't seem to be a very exciting company to have. It rose steadily from 2012 to 2015, but from 2015 to 2019 it had been pretty rough, but overall it was rather flat. Several notable drops are in 2016, followed by a consistently drop till early 2019, then extreme drop in the first quarter of 2020. The price recovered for a short while before continuing with a downward trend until the third quarter of 2020. It seemed to recover in the fourth quarter of 2020, but I believe the trajectory is still going down. Okay, how did I come up with that? To explain that, let's go to the earning multiply plot. Here, I add the 10 times earning multiply to the plot as a dashed green line. We can see that Singtel earning did not improve since 2016. Even, it seemed to decline until 2020. It decreased even faster from early 2020 to the first quarter of 2021. One thing about Singtel from my observation, the stock price seemed to somewhat follow their earnings. In a mature company, I would consider the stock is fairly priced if it is very close or below 10 times of its annual earning, or what I plot as the dashed green line on the screen. Since 2013, the price has been above the dashed green line, or its 10 times earning. We can see that there are multiple occasions where the price is being pulled down by company profitability. They are in the mid-2016, then 2017, and 2019. And of course, during the height of pandemic in the first quarter of 2020. In 2021, the price is way higher than the 10 times earning multiplier, which suggests to me the price is due to drop. My conviction is further supported by the next layer of information. Now here I add another layer of information, that is the 15 times earnings multiplier, given in lighter green dashed line or yellowish green dashed line. We can see that Singtel stock price had never passed 15 times earning multiplier until 2020. Since then, and until this video is recorded, Singtel stock price is above 15 times earning multiplier. So historically, in my opinion, it may be due to drop unless there is a significant increase in Singtel earning in 2021. But when it goes down, how far it would be? Here I annotate the 10 times earning multiplier with their value. I wouldn't be surprised if Singtel price could drop to around $1 or even 60 cents, while the current price is $2.43 per share. I know that is a very pessimistic view of Singtel, which I do hope it will not happen. Okay, in conclusion, Singtel is currently in dire situation that in the mid of transforming its business to stay relevant and fend off competitions. For this fact, I would not be making any position on Singtel at the moment. I do hope to see some good results of Singtel effort to transform itself, which eventually improves its earnings. Okay, so that's all my video for Singtel. I hope my analysis is useful and I'll see you in the next video. Goodbye.